Against the backdrop of global tariff pressures and a depreciating rupee, the Honorable Finance Minister has presented the 9th Union Budget 2026, prioritizing infrastructure and domestic manufacturing as key growth drivers. There is a continued focus on capital expenditure while maintaining a tight fiscal budget. This has been a key focus for the government over the last many budgets. Manufacturing is supported via expanded PLI schemes, a 10,000 crore MSME growth fund, and an India Semiconductor Mission 2.0 with a 40,000 crore outlay. Some of the sectors, two sectors I would like to highlight which have benefited from the budget: the pharma sector, which benefits from enhanced API production, biotech innovation and R&D incentives, while the tourism and hospitality sector gain from infrastructure improvements and investment in regional tourism circuits. Now, a clear roadmap for implementing the Simplified New Income Tax Act 2025 with effect from 1 April 2026 has been laid out. The core philosophy of the direct tax proposals is evident: protecting honest taxpayers, simplifying compliance, rationalizing penalties and prosecutions, and improving predictability while safeguarding revenue stability. Several compliance-friendly measures also stand out. The due date for filing revised returns has been extended to 31st March. Updated returns are now permitted during reassessment proceedings, subject to payment of an additional 10% tax. Rule-based automated issuance of lower or nil TDS and TCS certificates, acceptance of Form 15G and 15H directly by depositories, extension of the return filing due date to 31st August for non-audit cases, and much needed relief has been provided through reduction in TCS on overseas tour packages and LRS remittances. On the corporate tax front, the headline reform is the tax holiday extending till 2047 for foreign companies setting up data centers in India. This is sending a strong signal to global investors. A common safe harbor margin of 15.5% for IT services, along with increased thresholds, will materially reduce transfer pricing disputes and give a major boost to the global capability center coming into India. Tax incentives for toll manufacturers, expansion of REITs by PSUs, and treating buybacks to non-promoters as capital gains. These measures will support infrastructure development, real estate growth, and boost the consumption economy. Equally important is the rationalization of penalty and prosecution provisions, including immunity from penalty for genuine cases of misreporting, and a 6-month disclosure window for small taxpayers with foreign assets. On the indirect tax side, there is a reduction in duties on personal imports and an exemption of critical cancer medicines directly will lower the household costs. At the same time, removal of customs duties on raw materials for aviation MRO, electric vehicles and battery energy storage systems is designed to support India's energy transition. Overall, I would like to say that the Budget 2026 reflects a decisive shift towards simplicity, predictability, and taxpayer confidence. These reforms are expected to improve voluntary compliance, reduce litigation, and enhance ease of doing business. Thank you.